Hello there. Welcome to my class. My name is Marcio de Paula, and I will be your instructor for today's lesson. Today we will be talking about QuickBooks Desktop 2020 Chapter 7. In this chapter, you will examine the QuickBooks inventory features that help you track the items, goods, you offer for sale. An example of a company needing to track inventory is a retail store that sells electronics or a salon that sells styling products. QuickBooks provides additional features to create inventory items and purchase orders, receive items into inventory, sell inventory items, and run inventory-related reports when the inventory function is turned on. Additional accounts are created to track inventory assets and cost of goods sold. You will also set up and track sales tax, deal with customer refunds, explore standard inventory and sales reports, create and use items to track inventory, create purchase orders and receive items, adjust quantity/value on hand, sell items and process sales discounts and refunds, collect, track, and pay sales tax, use reports to manage inventory and sales. Now, let's get started. Jimmy Parrott is the owner of Parrott's Paradise Resort in Key West, Florida. He's been using QuickBooks to account for his service-based business for 2 months and is now opening a gift shop on the property, so he will need to begin using it to track inventory as well. In this chapter, as the bookkeeper for Parrott's Paradise Resort, you will help Jimmy set up inventory items in QuickBooks, order inventory, enter sales transactions, and track sales tax. You will also learn how to set up and receive payments when sales discounts are involved. Finally, you will explore sales reports and inventory reports to help manage inventory. Tracking inventory in QuickBooks. A useful feature in QuickBooks is inventory tracking. It must be turned on in the Preferences window. When activated, it will add links to the home page and options to the menu bar. Should I use QuickBooks to track my company's inventory? Not all companies are perfectly aligned to use QuickBooks to track their inventory. There are several factors you should consider before deciding to use QuickBooks to track your company's inventory items. How many types of products do I sell? QuickBooks Pro and Premier work well for companies that have up to a few hundred items. If you have more items, you may want to consider using QuickBooks Point of Sale Edition. Does my inventory include perishable items? The bookkeeping for perishable items can be a bit tedious due to differences between your on-hand quantities and what you have recorded in QuickBooks. Do I sell unique, one-of-a-kind products? If you sell items such as antiques, you will have to create a new QuickBooks item for each product you sell. Do I manufacture the products that I sell? Suppose you purchase raw materials and assemble them into products. In that case, you may want to look at purchasing QuickBooks Premier Manufacturing and Wholesale Edition or QuickBooks Enterprise Solutions Manufacturing and Wholesale Edition, which addresses the unique needs of manufacturing businesses. How fast do my inventory items become obsolete? If this time frame is relatively short, you may find that updating your inventory in QuickBooks is tedious. How do I value my inventory? QuickBooks Desktop uses the average cost method of inventory valuation. If you are using another one of the methods allowed by GAAP, such as LIFO or FIFO, or another method, you may want to look at using a different tool to track your inventory. Remember that the company should use the same accounting principles and methods from year to year. You will likely need to create a new account and possibly sub-accounts to track your inventory sales. In the following exercise, you will create 3 sub-accounts to make sure you track your sales effectively. Once inventory preferences are turned on, the QuickBooks Inventory Center will become available. This center looks like the customer and vendor centers, providing a convenient place for managing your inventory items. QuickBooks Premier and higher versions include a feature that allows you to convert units of measure, where you can work with either single units of measure, example, buy or sell a pound, or multiple units of measure, example, buy a yard, sell a foot. Using account numbers in QuickBooks. Many businesses use account numbers for the accounts in their chart of accounts. You will be using account numbers as you work with the company file for Parrott's Paradise Resort. Account numbers are somewhat standard within the accounting world. Somewhat means that each account type begins with the same number, but the accounts listed within the account type are not universally numbered. Examine the following table to understand how account numbers work. Note that account numbers have a minimum of 4 characters, and you can use up to 6. For instance, a checking account, which is an asset, could be numbered 1,000, 10,000, or 100,000. When you use subaccounts to categorize your QuickBooks data better, it's often difficult to see the name and number of the subaccount that you used because of the narrow account fields in the windows. You can overcome this problem by choosing to see only the lowest subaccount in these fields. For example, if you need to select the clothing subaccount, it would typically be displayed as 41,000 gift shop and vending sales, 41100 clothing sales. By choosing the Show Lowest Subaccount preference, it will simply be displayed as 41100 clothing sales. Tracking inventory sales. To most accurately track your inventory sales, you will create subaccounts for 41,000 gift shop and vending sales. When using subaccounts, it's crucial to always direct funds toward them rather than the parent account. The subaccounts that will be used to track retail sales are indented under the parent account, gift shop, and vending sales in the chart of accounts. The cost of goods sold is the expenses directly related to the manufacture or acquisition of products or services that the company sells. In manufacturing, some expenses that might be considered cost of goods sold are labor, raw materials, depreciation, and overhead. In the case of a retail operation, the cost of goods sold is the wholesale cost of inventory. You do not pass on the cost of goods sold to a customer, instead incorporate it into the product's final price. For cost of goods sold, accounts were created when the company file was set up using the lodging industry as a starting point for the new company file. Dealing with sales tax in QuickBooks. If you live in a state that collects sales tax, or your business requires that you collect and remit it for other states, you will need to set it up in your company file. Thankfully, QuickBooks makes it easy to charge and collect sales tax for items. You can also choose whether to charge tax for customers who resell merchandise to their customers. How you set up sales tax in QuickBooks depends entirely on which states you conduct business in. You must know the sales tax laws in your state and jurisdiction before you set up sales tax for your company, and what type of items are taxable so you can properly designate them in QuickBooks. When dealing with sales tax, learn about the sales tax laws in your jurisdiction. How you display items on invoices, whether items are stated separately or grouped, can affect the amount of tax due on a transaction. Talk to an accountant if necessary. Behind the scenes, the sales tax collected will be directed to a sales tax liability account that QuickBooks automatically creates for you. The funds will be held there until you pay them to the appropriate governing authority. To include sales tax on a sales form, you must set up the tax as an item. Often, you must pay the tax collected to multiple tax agencies. QuickBooks allows you to combine multiple sales tax items into a sales tax group. This is necessary, as you can apply only one sales tax item or group to a sales form. Before collecting sales tax, you must turn on the preference and create the appropriate sales tax items or group. In fact, you can create your sales tax items right from the Preferences window. Once you've created your sales tax items and groups, you should set the default to the most commonly used tax rate in Preferences. This rate will appear when you create a sales form for a customer for whom a tax rate is not specified. You can change it on a sale-by-sale basis. Some companies conduct business in multiple jurisdictions. The company must set up different sales tax items and/or groups with different rates in taxing agencies. You can set one default tax rate for the company or default tax rates for each customer. QuickBooks automatically sets up 2 sales tax codes when you turn on the preference, taxable and non-taxable. These codes are assigned to customers and items. QuickBooks will apply sales tax to any customer or item where the code is set to taxable, although this can be changed on an individual basis on the sales forms. You can even create additional sales tax codes as needed through the Sales Tax Code List. The Sales Tax Code List allows you to create additional codes such as out-of-state, allowing you to track sales to customers who do not live in your state and are not required to pay your sales tax. Setting up inventory items. To select items you will be selling from a sales form or purchase order, each one must first be set up as an item in the item list. Setting up your inventory requires an understanding of when to classify items as inventory parts or non-inventory parts. Inventory parts are tracked and sold by quantity. Examples of inventory parts might be vitamins that a doctor purchases and sells to patients, lamps that an interior decorating company buys and resells, or branded ceramic coffee cups that a bakery might sell. Non-inventory parts include items you don't track as inventory, such as nails used by a contractor or thread used by a seamstress, or items you purchase for a particular customer or items you sell but don't first purchase, such as livestock that you breed and sell. These products are necessary for the business, but they are not being stocked for resale to customers. The item list for Parrot's Paradise Resort has been set up to group items sold by category, represented by numbers. Most of the categories represent service items. Now, you will be creating inventory items for the retail sales category. Sales from each category are directed into a separate income account. Inventory items have two sides, one for the purchase information and the other for the sales information. When you purchase items at wholesale to resell to your customers, the purchase price you pay is the cost of goods sold. Your profit is the difference between your sales price and cost of goods sold. All the information needed to track both sides of the item is detailed in the new item window. Add and edit multiple list entries. If you're adding more than a few items at once, QuickBooks has a feature to record multiple entries in your lists easily. This feature is also available for customers and vendors to make your data entry faster. And you can quickly update several entries in your lists by right-clicking and choosing either the Clear Column or Copy Down command. The Add and Edit Multiple List Entries window resembles an Excel spreadsheet and quickly enters list entries. Purchase orders. Many businesses use purchase orders for ordering items into inventory. When a PO is created, nothing occurs behind the scenes, as you have done nothing yet to debit or credit an account. Select buttons below to read about elements of the image. The vendor message field displays when the PO is produced for the vendor, whereas the memo field is for your internal records. If you purchase items for sale to a specific customer, you can indicate that in the customer column and select it in the drop ship to field. Remember that it should record them at cost, not fair market value, when a company purchases assets. For example, if you bought an item worth $750 for $100, it should be recorded at $100. Non-posting accounts. When you create your first PO, QuickBooks creates a non-posting account, an account that does not affect your profit and loss or balance sheet reports, called purchase orders. Non-posting accounts appear at the end of your chart of accounts. By creating these accounts for you, QuickBooks allows you to create reports based on them. Receiving items. When you receive the items on a PO, you need to enter them into inventory. This transaction can be handled in either one or two steps, depending on how your vendor delivers the accompanying bill. If a vendor sends the inventory items and the bill together, you can record them as one transaction. If you receive the items first and the bill later, you will enter them separately. A drop-down arrow on the Receive Inventory task icon allows you to choose whether to enter the bill for the items with the inventory receipt or later. Including expenses on a bill for items. You may incur additional shipping and handling charges when you order inventory items. These charges should not be entered on the Items tab, where the inventory is entered, but rather as an expense on the Expenses tab. Expenditures listed on the Expenses tab will show up on a profit and loss report as an expense, whereas those on the Items tab will show up on the balance sheet as an asset. Your vendors may offer you discount payment terms as an incentive to pay your bills earlier, just as you may offer them to your customers. You can set default payment terms for a vendor, however, you may change the terms on an individual invoice as needed. You will use the payment terms of 1% 10 net 30 when entering a bill in this section. This means if you pay the bill within 10 days of receipt, you will receive a 1% discount. But if you don't pay within the first 10 days, the entire bill is due in 30 days. Selling inventory items. After you've ordered and received your items, it's time to start selling them. This section will use the Create Invoices window, batch process invoices, and apply discount payment terms to a sales transaction. There are two forms on which you process inventory sales in QuickBooks. The Create Invoices window on account it affects accounts receivable behind the scenes. The Enter Sales Receipts window, for immediate payment, it does not affect accounts receivable. The batch invoicing feature allows you to fill out an invoice just once for the customers in the batch, and then create invoices for all of them. This is highly efficient if your company charges a standard monthly fee for many customers. To complete this task, first, create a billing group of the customers for whom you wish to batch invoice, although you can add customers one at a time. Make sure the terms, sales tax code, and preferred delivery method are set up in the customer's record for any customer you wish to include in the batch. You also must have an email address entered for the customers you plan to batch invoice. After you've created a batch of invoices for customers, you will see the Batch Invoice Summary window. Here you can choose to either print or email the invoices, based on the preferred send method for each customer. Receiving discounted and electronic payments. The procedure for receiving a discounted customer payment is similar to receiving a regular payment, except that you must identify the account to be debited for the discount amount. You can easily apply the discount in the QuickBooks Discount and Credits window. QuickBooks calculates the discount for you based on the payment terms. In some instances, you may receive payments from your customers electronically. When the bank notifies you that you have received an electronic payment, you enter the receipt in the Receive Payments window, noting each check as the payment type. You will then be able to run reports, filtering by payment type, if you need to track electronic customer payments. For a fee, you can subscribe to QuickBooks Payments. This service has a Pay Now button you can include on emailed invoices so customers can instantly make payments. The service also allows you to accept credit card payments and bank transfers. In addition, your books will be automatically updated when the money is deposited into your bank account. There are monthly plans and transaction fees for this service. Refunds. There are many times when you may need to issue a refund to a customer, and a variety of reasons for doing so, such as for merchandise that has been returned, for an order that was canceled, to reimburse for an overpayment. When you choose to issue a refund, the Issue a Refund window appears. Here you can enter the information for the refund check based on the amount from the invoice. Credit memos. To account for returned merchandise, you will create a credit memo. After a credit memo has been created, you can choose to apply the credit to an invoice, so the customer can apply it toward a future purchase, or issue a refund check or a return of funds to a credit card. If you need to refund a customer for a purchase made on an invoice, you can use a feature in QuickBooks that allows you to convert an invoice to a credit memo with one click. This can save you time as you will not have to retype the information for the new transaction. Convert an invoice to a credit memo by clicking the Refund and Credit button on the Create Invoices window ribbon. After a credit has been issued to a customer, you can apply it against invoices for future purchases. This is done through the Create Invoices or Receive Payments windows. The Apply Credits window allows you to apply for existing customer credits against an invoice. If you're on the receiving end of a credit memo, you will need to enter it in your QuickBooks file as well. This is easily done through the Enter Bills window. After you have recorded the credit, use it when you pay bills to this vendor in the future. Inventory reports. QuickBooks features many preset reports to help you efficiently manage inventory and sales, and many other financial aspects of your company. These reports can be accessed via the Report Center or the menu bar. The reports in the inventory category of the Report Center provide an excellent start for obtaining information about your inventory. If you don't find the exact report you need, you can create a custom one or search the reports for your industry submitted by other QuickBooks users, found on the Contributed tab. All of the reports in the Report Center can also be produced from the Reports option on the menu bar. The carousel view of the Report Center helps you find just the right report. Use the left and right arrow keys to flip through the slides of the different reports in a category. Below the report slide are commands to set the report date range, run the report, mark it as a favorite, or search for help on it. The report categories are the same in the Report Center and the Reports menu, though additional options are available via the menu. Periodically, it's important to physically count your inventory items to ensure what is on the books is actually what you have in stock. Many businesses do this type of procedure annually and adjust their books accordingly. QuickBooks provides a great report to aid in this process: the physical inventory worksheet. It shows the name, description, preferred vendor, and on-hand quantity of each item you have in inventory. It also provides a column with blank lines to record your actual count during a physical inventory count. The physical inventory worksheet aids you in conducting a count of your inventory items to ensure the quantity on hand in QuickBooks matches the actual amount you physically have. That's all for today. Your next step is to review this chapter and get the exercises started. Thank you for participating in today's lesson. I will see you in our next session. And remember, if you don't know, askmarcio.com.